Well, hey, everyone. Hope you're having a great day as always, guys. The markets have been rough, but doesn't mean that we have to be. And, basically, we want to be in the position of power by building thesis constantly. We want to be in a position of power where we don't, you know, feel like talking about mainstream companies, consider inflationary beneficiary companies, hedging onto our portfolios, keeping cash, all sorts of position of power. There's so many things that we can do. So basically, want to give a heads up that we have to be in that way, because these are really turbulent times, right? These are very turbulent times. These are things to take note of. Uh, this is where the fear index are at not maximum yet, but is way high. The statistics just came out that 48% think that this is are more bearish rather than bullish, and only 28% is on bullish mode since 1940 or something like that. So yeah, these are really tough times. And other than keeping cash, other than you know other than keeping cash, basically, other than just holding on to what we have, we are supposed to be more aggressive, to be frank, in the market. Right now, we can never predict recessions, so we should be more aggressive, because it doesn't work that way. We can't follow the herd. The herd says, let's sell our stocks, let's go away. Yeah, but statistics show us that, based on if our money is in there for the long run, and if it can afford to be on the long run, then we are supposed to be investing more. And that's where we should be doing the opposite, right? We should be contrarian investors rather than not, right? So that's the concept. Yeah, that's the concept. Now, today is going to be a very exciting topic, because today we'll be talking about a company that has the potential to grow 75%, right? 75% on revenues, and they are already profitable. But guess what? There's a catch. And I already shared my slide from the beginning of the video. You already know who it is. The company is none other than Upstart. Now, before I begin, I really appreciate it if you guys, show brothers some love. Yep. Smash that like on the Facebook, since we go live every week. Smash that heart button. Yep. Type in there Upstart. If you're investing in Upstart, right, let me know. And if you want me to talk about the market next week, type in market so that I know you guys are here. If you're watching this on replay, click hashtag replay so that I know you're here. And again, if you want me to touch on any topic, I'll be there to cover it. Yep, I'll be there to cover it. I know a lot of you are watching on YouTube, so that's great. I've heard a lot of comments from there. Great comments on LAC, great comments on Oxy. Keep him coming, right? Keep him coming. It's good or bad, I'll be willing to accept it, because that's what it is. We want to poke holes to the thesis that we have already, derived, right? So that's the key basis, and that's the whole point of having a community where we can actually share out. Now, let's go on, and I'm going to share my screen here, guys. So, Upstart. Okay, what is so fantastic about Upstart? Now, first of all, when we look into the numbers, Upstart is a company that actually have grown 250% year over year. Okay, we're going to jump into the numbers later, but let's talk about what Upstart does. Now, in a world where consumer credit is still lagging behind in terms of traditional, the traditional ways of consumer credit. For example, if you want to have unsecured personal loans or any form of loans, you will eventually go to a bank, apply it the traditional way. Yep. From, filling up some forms, assessing your credit score, getting a loan maybe in 2 months or 1 month, right? The thing about Upstart is making that frictionless. Okay, that's just one part of it. The second part of it is basically using AI to tell the bank, hey, this is this particular person that you're gonna, lend to is has a high risk of default. So what the AI does is that they reduce on default. Yep, they reduce on particular default. They have the chance to basically, they have the chance to actually reduce risk for the bank and tell them, hey, okay, and also increase the particular loans interest, reduce the interest, yep, and save more for both parties, right? Save more for the user, save more for the bank, simply because everything is frictionless. So they can eventually, the AI and ML can eventually tell that particular company that this loan is supposed to be, there's a lesser chance for it to default. That saves them a lot of money, a lot of time, and it will make the banks more profitable in the end of the day. Now, why do I like this model? I like this model because they are not a bank. They don't want to be a bank, right? You see where I'm getting at? They don't want to be a bank. They want to be the third party asset-light company telling the bank that, okay, this particular person is good to go. And it also gives chance for consumers that does not have a good history of borrowing, or has not have a good history of applying loans. It also helps them in a way because it all comes back into data, right? The historical data, all sorts of data to sort of tell the bank that, hey, let's give, based on this data, let's give this guy a chance to borrow a loan, right? So that's where Upstart comes in and has that fit, simply because they, the AI does everything. That's the future, right? So I'm going to jump into the 10K here before I go into the presentation. And I'm going to go into MD&A, where we can actually analyze together, the business overview, right? The business overview. So they want to apply data science and technology to the process of underwriting consumer credit, right? By providing our bank partners, that's where they actually have bank partners. They don't need to be a bank. That's the beauty of Upstart, right? With a proprietary AI-based origination platform, we help them originate credit with high approval rates, loss rates, and a high degree of automation. It's as simple as that. As our technology continues to improve and additional banks adopt our platform, consumers benefit from improved access to affordable and frictionless credit. So we believe that banks, traditional lenders, to be at the forefront, and we believe AI will be increasingly critical, and that's true. So the TAM that they highlighted is a $2 to $3 trillion TAM. Now, I don't like how companies actually, navigate the TAM. It's good, it's important, it's growing. But what is more important is actually the SOM, right? What is the serviceable, obtainable market? Because if the SOM is logical and realistic, then most likely you can, most likely the companies will thrive, right? Most likely the companies will thrive, and they can actually capture more market share. And what's important is, how is that SOM going to be more attractive to increase the circle within their own revenues and their own net income and their own growth? They're fighting against themselves, right? So how do they generate revenue? Is two ways. How consumers can obtain Upstart loans is two ways. Either by referral from upstart.com. So they also have a website. So I'm in Malaysia. I can't really explore the website because one more step to access the site. Yeah, basically they have Upstart.com. Okay. And Upstart.com is all Upstart AI powered loans. That's their specialty. That's their value proposition, right? They are AI company. Think of them as the AI for fintech, AI for loans, AI for banks, right? So consumers, they go to Upstart.com, they want to apply for a loan. They can actually apply. I'm human. I'm just gonna check this quick. Boat. Next. Boat. No, this is not a boat. Boat. There we go. So you have access to mortgage loans, personal loans, consolidate debt, pay off credit cards, something else, right? So I want to refinance my car. I can't really do it because actually I'm in Malaysia. But the point is, well, I can fill out my names, but in the end of the day, they won't recognize me because I'm in Malaysia. But anyway, my point is consumers can go to the website and they can apply the loan from there. Now they refer that to bank partners, so they get a commission. That's how they recognize revenues, right? Or they go directly to the bank partner's website, for example, JP Morgan. There's a little section on, hey, try our new Upstart product, try our new AI-driven loan. Faster, right? AI-driven, all the data coming to you, blah, 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 all frictionless, all non-traditional, all the new stuff, right? So we have to understand that bit because we have the workflow simply because we need to know how they generate revenues and whether or not it's really frictionless. So now, guys, if you use Upstart, have used before on a loan, please type in there loan, right? Even on YouTube, whatever, right? Just let me know because we want to know whether or not you guys are using it. How is your experience? We can build a high quality discussion together. Let me know. So basically, this is what they do. Now, the catch that I am trying to say when beginning of this live is that they're a fintech company. That's essentially it, right? They are growing 75%. They're huge. They're already profitable, but it's a fintech company. So why fintech company? Because in this market right now, they are getting a lot of hate, right? They're getting pressured now. Re-rating. I don't care if you're profitable. I don't care if you got cash in the bank. I don't care if you're asset light. You are, well, a fintech company. So basically, apologize. I got a bit of a running nose. So basically, if you're a fintech company, you're getting a lot of hate in the market. When you're getting a lot of hate in the market, no matter what you do in your financials, your valuation, your stock price is going to go down, right? So that's the catch. Do we want to be investing in fintech companies this year simply because of all these hate, right? Daniel Ramirez, good to have you here. Awesome. Hopefully you're investing in Upstart. Let me know. Put in the comments that Upstart if you are. So yeah, let's get to it. Yeah, so that's how that's how basically how consumers reach Upstart. That's how Upstart earns money. And basically our bank partners can retain loans that align with their business and risk objectives. Now they diversify the risk simply by just giving it to them, right? They give them the loans. They can also procure the loans themselves, but again, they don't want to be, a bank at the end of the day. They want to be the AI provider. That's the key thing. That's the key thing. So if I was to summarize the bullish points, it would be it's frictionless. They have a product fit. Now, imagine the TAM that I mentioned is 2 to 3 trillion. And that comprises of all the loans, all sorts of loans. We got real estate, we have unsecured personal loans, we have, car loans, all sorts of loans, right? And that comprises of 2 to 3 trillion. The beauty of Upstart is that they can potentially grab the whole pie Well, obviously, if there's another AI company on board, which is Pagaya, not listed, but SoFi is, SoFi is partnering with Pagaya, but that is their competitor. I don't see any direct competitors. That's the thing I'm trying to say. So, hey, Vladimir, Jasmine, thanks for your question. Do you prefer them compared to SoFi? So, I'm a huge SoFi bull, for sure. Okay, I'm a huge SoFi bull for sure. I've been saying it out in the in the group before. I have them in the public account that I'm sharing with you guys transparently. So far, not so good results, sad to say. But if I was to choose which will be a better, performing company this year, I would definitely say Upstart. Okay, again, bear in mind, why am I saying this catch? Why am I mentioning these catch? Is because if no matter what you do in their financials, let's say they are reporting, results on May. And no matter what the results are, if let's say the market is still pressuring, giving them pressure, it doesn't matter. So we have to be cautious, right? If we start a position at $84, which is, I don't know, 82 or whatever it is right now, we have to understand that they might even go down 30%. And don't be surprised, because it's fintech. Not only them, like Stone Cold, they've been around the block for so long, they're getting hate. All these sort of PayPal is down 60-70% from the highs. And they already been, they're the most stable fintech company, right? So that's my point. If you want to invest in them, invest long term. That's number one I want to highlight. Okay, do not expect quick riches from this company. Number two, they are already profitable. They're asset light. They don't need to be similar to a bank. They don't need a bank charter, which which is a different scenario. But anyway, they don't need to have that. Obviously, there's advantages and disadvantages. Advantages of the bank charter and the bank is essentially you can use people deposits, and we said this before in previous lives. You can use people's deposits and you can actually fund your own loans. That is free money. You're taking money from the restricted cash of your balance sheet, you're funding it as a loan, and you're getting interest. It's as simple as that, right? So that is free money. That's how you can generate that. That's how banks make money, right? Either from deposits or direct transfers, whatever. Now, the thing about Upstart is, which I like, is their asset light. They don't need to have all that risk highlighted in the balance sheet. And they can just be, okay, I just get referral fees from banks. I don't need to be a bank. I'm supplying to the bank. So in a way, well, they're not really competitor. In fact, they can use Upstart on their services. But in a way, they are competing because they are powering other traditional banks to be better, where SoFi wants to disrupt the whole, neo-banking game, right? They want to let traditional banks out of business, grabbing market share, which is very difficult to do and it requires time. So to answer your question, I would prefer Upstart than SoFi this year, simply because they're already profitable. And their numbers are crazy. Let's put it that way. Their numbers are crazy for a company that has been profitable for that has been around the block for in such a short span of time, and to be profitable, it's it's a huge step to be in, right? It's a huge step. Yeah, no problem, Jasmine. So again, are you invested in Upstart? Let me know, right? Let me know in the comments. Daniel, Vladimir, Jasmine, just type Upstart if you are, and or any other company, right? So again, this is what they do. This is how they make money. Now let's jump into I'm looking at the MD&A. This is the MD&A economy model, COVID impact. Let's see, bank and market adoption. Banks plays two roles: funding loans and acquiring new customers. That's all they want. They want new customers from the banks, right? And they want them to fund their loans, right? Traditional lenders such as banks tend to enjoy, okay, product expansion, macroeconomic cycles. Now, transaction volume. This is what we want to see. Yep. They have 11B of transaction volumes, right? 2021. Then that's been growing crazily, 3x, 4x, close to 4x, right? Transaction volume, number of loans, conversion rate 23%. That's key, right? How is your transaction volume going in and out from the side? And how much are they actually translated into actual revenues, right? So that's the conversion rate that's been increasing. That's good news. Percentage of loans fully automated, 69%. Contribution margin at 50%. That's good. It's increasing. Adjusted EBITDA. Well, I don't really like to look at adjusted EBITDA because it's adjusted, right? It's a non-GAAP metric. But what's key is they're already profitable GAAP-wise. And for a fintech to reach profitable GAAP-wise in such a short period of time, that is what we should be bullish about. Let's put it that way. Yep. So they give definition of transaction volume, conversion rate, whatnot. So referral fees. Okay, so this is important because we want to know the segregation of revenue distribution, right? So referral fees at 497M, platform fees at 228M, right? So it's most likely still majority of revenue is still referral, right? Referral meaning that, okay, it's good because it tells you that people visit upstart.com and then they say, okay, you know what, they refer to their bank partner. Okay, bro, take that loan. I just want to get my referral. You see how lucrative that is? You see how asset light their model is? They get in, they get out, referral. Okay, I'm just a third party. I provide their services on AI. Okay, I'm done, right? So what do you expect on the balance sheet? Net cash, right? Net cash balance sheet, good margins, because it's not like undertaking. So what I'm trying to say is that, see, we got SoFi where they want to undertake everything, right? They have to be. They have a bank, A to Z. The benefit is that if they can scale and if they can really reach market share, which I believe they can, but it's a long-term game. Whereas Upstart, in terms of short-term or even long-term, right? They have good potential short-term, long-term wise. They can eventually grab market share just on the AI part, and they don't care which banks thrive, right? Neo-banking thrive, traditional banking thrive. They don't care. As long as their bank partners, which they are still working to get more bank partners, gets them referral on the fees. That's simple as that, right? So servicing and other fees. So total revenue is actually 801 million. They have to pay borrower acquisition costs, right? And total direct expenses, which is their OPEX, total direct expenses relating to the cost of product, which brings them to a contribution profit of 397M. Yep. So management, okay, adjusted that. So basically, they do check out the MD&A, guys. This thesis is just to get you started on building a DUD, just to get you interested. But just read up how do they get platform referral fees? How do they make money? What is their cost on, right? Sales and marketing. So I'm going to jump into the numbers real quick, and there we go. Now. And the sexy story about Upstart, which I missed, was that, so if I was to summarize the bullet, sorry, I didn't finish on my bullish summary. Number one, frictionless credit, consumer credit, which is a good market fit for the future, AI especially. AI is a sexy story, right? The only key thing is how impactful is AI, because everywhere is AI, ML, right? Machine learning. So how is that impactful? That's why I was asking, especially our friends abroad in the US, how does it work? Majority of the revenues geographically is US for sure. How are they going to branch out to other countries? And they do not have to just to be getting that storm. All they need to focus is US, and they can be profitable and, gaining 400% profits, no problem. Into growth. Yeah, that's another thing. But so that's number one, okay, bullish thesis. Number two is asset light model. They do not need to be the bank themselves, okay? Number three, they are still growing heavily in revenues and they have a good TAM to capture, right? And number four, their operating expenses can be very lean, right? Simply because of that. Now imagine, it's when I look at technology platform companies, all of the operations are just on uh you know their platform itself. So as they scale, all they need is to be putting in more costs for product development, R&D costs, right? To be making their site more sexy, more powered. Obviously, and this, they're lower down the S curve. So they need, and they're also depending on their upstart.com to be generating revenues. So they need to spend on sales and marketing. So that's why we see that huge jump in sales and marketing. But luckily, the total quantum of revenues increase is 70+%, right? Now that's the key. That's the key. So I always like to work out how many percent of sales and sorry. Sales and marketing is 117 million, right? Total operating expenses are 333. So 117, we have 848. It's only 13 to 14% sales and marketing. See, this is where they differ from SoFi. SoFi requires heavy sales and marketing. And it's understandable. I mean, they want to be a bank. They need people. They are using their business in order to generate revenues is to be dragging them in and saying, okay, use our product, right? We can upsell you from the top of the funnel. You open up an account, you do a direct transfer, and from the rest, you can upsell on their own. It takes time, right? But on Upstart's case, they are managing a technology platform, which we can see from the numbers is the highest amount, 133 mil. So that's where they scale. As time goes, do you think they'll continue to spend so much on engineering and product development costs? No, it will scale down. So when the organic growth comes in and their name comes in of AI, like AI equals Upstart, their sales and marketing will also go down. And that's the gist of how they can scale, right? So this is why I'm really bullish on Upstart as well. Given their numbers have been performing, given their traction has been performing, given that the whole TAM itself is actually realistic to capture, considering that they have no other big competitors to take the cake. So yeah, this is it. Now, just understanding the numbers, we are looking at an 848 total revenue, total revenues. Total OPEX is at 333. That is how sexy this business model is. We're looking at total operating expenses of 700 mil. Oh, okay. I'm mistaken. Sales and marketing is at 333. Oh my God. Why am I thought 333 was in the blue line. Sorry. Yeah, okay. Then it makes sense, right? Sales and marketing is 848, which is 39%. Now that is worrying normally. And it makes sense because they're still young in the S curve, right? It's a huge chunk, by the way. It's like 3x more than 2020. So it is a huge chunk of the revenues, preferably 20%. But it has to be that way because, okay, they are selling their website, right? They're selling it out there and saying, okay, join upstart.com. When you join upstart.com, they don't know that you get, they know, the consumers know that you're getting referred because essentially at the end of the day, that's what the banks you have to deal with. But they have to market the website itself. But the beauty of this company is that how they scale more onto being more profitable and expanding margins simply by grabbing market share and having not to do it. Now, the bad thing about this company is that the upsell potential. So the reason why I'm so bullish on SoFi is because they can actually cross-sell and upsell better. That's where organic growth comes in. That's where they lower down, CAC, customer cost of acquisition. That's what I'm bullish about, right? So that's, in a way, that's the bad thing about Upstart is that they are up. So they can actually tap onto their cross-sell potential by selling more products, but they don't want to be a bank. So they just want to keep it lean, right? So yeah, the bad thing again is, 39% of sales and marketing, engineering and product development costs will eventually go down, right? Customer operations, G&A, okay, controllable amount. So total operating expenses are 707 M. Now on a GAAP basis. Now they're already profitable 135 M. If they can if they can increase revenues by 57%, which is what the management highlighted, right? So for reading the transcript, the guidance is actually revenue of approximately 1.4 billion, which is an increase, sorry, 65%, not 57, right? 65%. And contribution margin of 45%. So, contribution margins 50%, they're actually guiding lower. Adjusted EBITDA of approximately 17%. That's fucking amazing. Okay. And auto loan transaction to be 1.5 billion. It was 1 plus. So if they were smart, this would be sandbagged and they would increase guidance. So this is where the management, and another bullish thesis is that they have a sexy story. The management, the CEO is actually from Google. So everyone loves a good, sexy, management story, right? So that's where I'm bullish also, right? Looking at the team, everyone loves AI. He's from Google, then okay, Google means good, right? They were one of the beginning members of Google, which is cool. So yeah, they already net income positive of 135 mil. If they were to grow 65% in revenues, how much net income increase can they actually do? Right now, hopefully, based on the numbers, they can actually scale down. They can scale down sales and marketing, but eventually to do a projection on the valuation or projection for this year's net income, all you can do a percentage of sales and marketing on the revenues, right? Percentage of this, you add them all up, you should see probably a 30% increase in net income. Now, that's where we eventually have to do valuation, right? So let's see Upstart market cap. And I'm using a PE multiple valuation. So the beauty is that they are at 7 billion. Okay. Again, the market doesn't care if it's 7 billion, right? SoFi is at 6 billion. Okay. So the market doesn't care. The market says, I don't care. You're profitable, you're fintech, you're going down, right? Because of high interest rates. But essentially, if they can grow 30% of net income, we're looking at 175 M, which, by the way, I haven't worked out the numbers. Okay. I only know that based on guidance is really achievable, right? Because they didn't guide net income, they guided revenues, right? So let's say it's an increase in 30%, which brings them to 175 M. If we work out valuations, we're looking at 40 PE potentially. That means full year 2022, there might be a 40 PE company. Now, the thing to consider is 40 PE too high? Is it decent? Again, the market doesn't care, I know. But for a company that is growing 70, 60% in revenues, has good TAM potential, has a good product market fit for the future, is it cheap compared to other fintech companies? That's the key, right? So that's something to think about, guys. That's something to think about. If they increase more net income, then their PE will go down. And if their market cap goes down further, they'll be even more cheaper. So if they eventually go to a 30 PE company, that says something, right? That says something. So hope you guys had some value out of this. Sales marketing is 333. Yeah, spot on. Sorry, brother. I mistaken. So yeah, hope you guys got some value out of this. If you're investing in Upstart, if you're bullish, let me know. Just type in Upstart. If you enjoyed this, if you're watching this on replay, clear hashtag replay. Sorry for my running nose, but they're getting a lot of hate, like 6% last trading day. So yeah, this is something to think about. Again, if you guys got some value out of this, type in, let me know. Give me a direct message on Facebook or the Discord group, and I'll see you guys next one. Bye.